Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Plug Power continues to be one of the most controversial companies in renewable energy, and the stock's performance really shows that investors are kind of all over the place with the company. Shares are up 418% over the last 5 years, but they're actually down 43% over the past year. So what's the real story here, and what are the challenges that I'm looking at with Plug Power? That's what I want to dig into today. My name is Travis William. Thanks for watching Asymmetric Investing. Subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing. Got a link to that in the show notes. I think you'll enjoy that if you're looking for high potential stocks like Plug Power. And I want to cover three things that I think are challenging. The first really comes down to the competitive landscape that Plug Power is in. Hydrogen is not a business that's not without its own competitive challenges. And in this case, there are a couple of major companies that are trying to make a big play into the hydrogen space. Another one of them is Bloom Energy. Bloom Energy is an interesting competitor because they have a different technology, solid oxide cell versus the PEM cell that Plug Power is using. So they operate a little bit differently. They operate at different temperatures, different efficiencies. And as both of these companies try to get specifically into the electrolyzer market and some of these more industrial applications, I think we're starting to see Bloom have its technology show a little bit better. And this is a recent release from them that showed that they say that their product is going to be more efficient and produces more hydrogen per megawatt. So megawatts are your input energy. That's really the main cost that you have for operating your system. It says that they're 20 to 25% more efficient than proton electrolyte membrane or PEM technology. Bloom Energy's technology is really the major competitor to what Plug Power is trying to do, specifically in electrolyzers, but they competed in a lot of different markets. And this is one of the reasons that Bloom Energy generates more revenue, and it also generates better margins than Plug Power. This is the kind of fundamental thing that investors should be really looking at. So if these numbers are true, and the market is indicating that they are true because Bloom Energy is getting a lot of momentum, is generating better margins, that indicates that customers are willing to pay more for their products, then that's really a challenge for Plug Power's products and the demand for those long term. The second thing that I want to look at is more operational for Plug Power. This is the company's cash flow statement, and this is really where investors should be concerned right now. Plug Power has plenty of cash on the balance sheet, but the challenge for this company for really 2 decades has been that they just keep burning cash and never actually get to the point where they're actually generating a profit. It's just never happened. This is the most recent number. So remember, this here is 3 months ended March 31st, 2023. Net loss was $206.6 million, but the cash used from operating activities, $276.9 million. Investing activities, purchase of property, plant, and equipment. So that would be capital expenditures, another $167 million. And the only reason that the investment activities number is positive is because there were proceeds from the maturity of some available for sale securities. The same trend happened last quarter where you had more proceeds from sales of available for sale securities. So if it wasn't for that, you would have another $150, $175 million of negative cash flow from investing activities. This is just an unsustainable rate of cash burn for any company. And as I go up here, even with a balance sheet that has over $1.5 billion worth of cash, that cash actually doesn't last that long when you're burning your cash that fast. That is a fundamental problem for Plug Power, and I don't see any case that they're going to be positive cash flow anytime soon. The final challenge to look at really comes down to commodities, and the natural gas spot price is really what I'm looking at here. Over the past year, you can see that the spot price for natural gas in the US is down 58%. That's pretty consistent with what's going on in Europe. You might remember last year was when natural gas prices spiked because of Russia's invasion of Ukraine, really disrupted the natural gas market. Prices went crazy, but now we're down to relatively low levels. The reason that this is important is natural gas is both a competing source of energy on the production side, so on the fuel cell demand side, and on the hydrogen side. Most hydrogen today is a byproduct from natural gas. It's called gray hydrogen. So companies like Plug Power, Bloom Energy, they're trying to create more green hydrogen. So hydrogen produced from green sources like wind and solar. But what they're competing with on a cost basis is gray hydrogen, which comes from natural gas. So the drop in prices for natural gas is actually competing with the economics of green hydrogen. So that's a challenge for any company trying to get into the electrolyzer space, because the numbers just don't pencil nearly as well when your competition is a little bit lower price. So those are three major challenges. But the one that I want to keep coming back to with Plug Power is the company is not profitable, it's not generating cash. And even though it may say that it's going to be cash flow positive in the near future, it's been saying that for a decade. So this is not a company that we can trust what management is saying, because it never seems to get there. And until Plug Power starts to generate a profit, generate positive cash flow from operations, this is simply a stock that I would stay away from. But if you disagree, let me know in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.